Sure. Yeah, no, and I think it's definitely there's some opportunity within it to just kind of say, you know what, if the Fed is raising rates, a lot of people are going to get short term scared, but then there's that opportunity to potentially pick up some things long term, and it's not in their best interest to crash the markets either. They're just trying to control inflation, which is what they're intended to do, or at least that's their proposed goal. So yeah, for sure. Is there any other charts or things that you're looking at in terms of setups, markets? What else are you thinking?
No, I think the only other thing that I've been really thinking through, and it's not necessarily, maybe something that, your audience is necessarily super interested in, but I've been watching a lot of the specific sectors in terms
Sure.
of like, what's been traditionally strong during,
Mhm.
inflationary periods,
Sure.
and
So
will
what is this
those
one looking at?
yeah,
XLF
so
is
XLF tracks like the financials. So you
right.
got the big banks, you got like maybe your American Expresses of the world. So, generally speaking, banks benefit from interest rates, right? They're the
Yep.
ones that are lending out, money. So as the Fed raises rates, they can lend things out at a higher rate. So, I think over the last couple of months and really 6 months, you've seen, the banks do well because of this interest rate environment, and because generally speaking, they were pretty low valuations. So what I'm trying to work through at this point is how far can the banks run, right? Because the market is
Right.
forward looking. So eventually you're going to hit this point where, you know, everything is priced in from a rate hike perspective.
Right.
So I think at that point, people will start to rotate out of these cyclicals. Um, so I'm still in, the financials. I'll probably be in it for the rest of the quarter.
Mm.
But I think as we move into maybe like Q2, middle of next year, or excuse me, middle of this year, I could see myself potentially selling those positions and moving into something that's been hit a little bit harder. Like if tech's still getting hit,
Sure.
toward the middle of the year, I'll probably cash out of these, financial positions that I'm in and rotate into the positions where I feel like there's more opportunity.
You know what's actually interesting? You make a really, really good point. So for the audience that pays attention to the Fed, and if you have kept up with, we've been talking about the US dollar quite substantially. Even though you may not trade XLF or individual ETFs or companies, the thing that's interesting here is Garrett's making the point. You're making about the point about banks and forward-looking market stuff. Well, that's similar to just the whole Fed and US dollar concept that we discuss so often on the channel. You're always, as the market tries to predict or forecast sort of what's next, they're not trying to focus on news hit today, because a lot of times that news was sort of expected, it was forecasted to some degree. And so it is one of those things. The Fed right now, we are all hearing the rumors. We're hearing the concepts of, rate hikes are coming. We're trying to combat inflation, and we're cracking down on it. That's what we hear, and that's why we see the market sort of being like, okay, that's coming. So that's why we're looking at this. So when Garrett, you make the point about XLF and it's trending higher, and you're trying to even get ahead of the curve too, in the sense of when is that narrative going to shift, and when are we going to start seeing less bullishness or on financials, aka also like the dollar similarly. That's definitely an interesting point. So what would be the earliest warning sign that you can think of, or things that you might be looking at to be like, okay, let me just put
Yeah,
a pin in this?
it's a good question. Honestly, for me, it's probably going to come down to at some point we're going to see either CPI not, or basically inflation numbers either in line with expectations or starting to go below or underneath
Mm-hmm.
expectations, right? So I think at that point, I don't necessarily think the Fed would immediately stop raising rates, but I think the Fed could feel good about, okay, maybe we only do a couple more 25 basis point rate hikes. I think at that point, you're going to start to see people rotate out of these kind of more cyclical names because they've had such a good run. Like, so we've got XLF here, we've got, so XLE, that's like your energy. So your oil,
Yep.
like your
Yep.
commodities. I
Commodities.
mean, look at this run. Like that's absurd. So I
Right.
think like, and that's, dramatically impacted by oil prices, right? So
Sure.
you've seen, oil is sitting at like, I think it might be under 80 now, but anyways, I mean, it's been a huge run. So I think at some point you're going to see investors take some money off the table and rotate back because that's the way that cyclicals work, right? It's,
Sure.
you're in it for a couple of quarters, maybe a year, and then you rotate back out of it once that particular commodity ends up shifting. So I think for me, it would be, like I said, starting to see inflation cool down, in which case, you could see people start to rotate out of this. But at the same time, I mean, from a demand standpoint, I think there's something to be said about, the economy continues to reopen. So you could still see some of these trades working for the rest of the year.
Sure.
That's the way that I'm thinking about it.
Yeah, I think it's a fair point. So the earliest warning sign, which I would tend to agree with, would be looking for inflation, potentially looking basically for the Fed's goals to sort of starting to be met. As soon as you start to see that, it's kind of like when we saw inflation going up and up and up. At some point, there was the expectation around the corner that they would start to become a little bit more hawkish in terms of rate hikes and cutting, QE and all that sort of stuff. So you put all that together, it's a little bit of reading the tea leaves, but it's trying to figure
Absolutely.
out, what their next move is likely to be, and playing accordingly. So I think that's really cool and good, definitely good points to think about.
Yeah, as stock traders, as currency traders, we're predicting the future, right? So it's not an easy thing to do, but I think that there's ways that we can put the odds in our favor, which is really the goal.
Right.
So yeah, it'll be interesting to see what happens. And then, just the last point that I wanted to make is again, just to show that markets are forward looking, people have been in these financial and energy trades for over a year, just waiting, right? Waiting for this stuff to happen. And it's only now that it's come to fruition. So I think, the last point is if you are, a longer term swing trader, be patient in your trades, right? If your thesis is sound and nothing's changed in the underlying logic, then I think you stick with it.
Right. For sure. Well, Garrett, thank you very much for coming on, man. It's always a pleasure. And I think that was probably some of the most detailed Fed talk stuff that we've had on the channel so far. So that was awesome to have. So thanks for coming on, man. And I'm sure, well, before we go, let me remind people to follow you. You've got Instagram and you've got a YouTube channel, correct?
Yep, got the YouTube channel. Should be the same handle as the Instagram. So it's Garrett Invests. So Garrett Invests.
Yep.
Same handle on both Instagram and YouTube.
Cool. We'll put it up on the screen so people can find you too. So yeah, guys, definitely go blow Garrett up. Go check him out and find him on Instagram, YouTube. He's got some great points, as you could see here. And I'm sure that you'll probably be back, which will be awesome to hear more from you as things continue to play out here with the Fed and markets in general.
Absolutely. Thanks for having me on.
Interested in seeing our trades live as they happen? By joining the A1 Trading Discord, you'll get a notification every time one of our traders enters a position. Each trade we share comes with an entry price, a stop loss, and most importantly, a full breakdown of why the trade was taken. Learn alongside our experienced traders, join our active chat room, and ask your questions in our coaching webinars. Between our team of active traders, we trade forex pairs, commodities like gold and oil, crypto, and stocks. By joining the group, you'll be able to keep up with all of it. Sign up today using the link in the description, and don't forget to use our promo code listed below for a special subscriber discount. Thanks for watching, and see you inside.